With no news catalyst this week, as SPY ripped higher, the bulls were on parade. Let's go. SPY gap opened on Monday and stumbled on Wednesday's open, but then ran it into the end of the week. With PPI on Tuesday and CPI on Wednesday in the week ahead, if those prints are cool, then you better be long or you'll be wrong. Remember, with the market, it's okay to be wrong, just don't stay that way. Now, I could end the video right here, but instead, are there any clues the market is signaling that may help us understand otherwise? Let's dig a little deeper. We'll get back to SPY weekly in a bit, but first, let's look at a heat map of the weekly for the S&P 500, as this will help us focus on the S&P sectors, and then we can get to the weekly chart. Now, this chart is what we call a bull bonanza, with only a few red dots poking out. One being Tesla, which I'll discuss in a little more detail later. But don't let all this green hide how defensive such as staples, utilities, and now even healthcare is really starting to get into the mix. Again, this is where MMs park their money that can't go into cash if they think a reversal is coming. And financials rebounded nicely. And later we'll look at Bitcoin as well, plus some other charts to get a better picture. But for now, let's flip over to the percentage of S&P 500 stocks trading above their 20-day simple moving average. And what we see here is that we broke through these cluster of moving averages, including the 200-day simple moving average. And at this point, I'm checking off one in the bulls camp, as this one can stay above 75% for a prolonged period of time as the market moves higher. Now, if we look at the percentage of S&P 500 stocks trading above their 50-day simple moving average, we see that this one had some legs. And it ends up in a curious spot here as it comes into all these moving averages. And if the print is cool, then this one can continue to move higher as well. So we'll go ahead and put another checkbox in the bull camp. Now, if we turn our attention to SPY weekly, the first thing we notice is this hanging man candle that we spoke about last week. This was nullified with a price action move to the upside. And we see here that we held this 5 exponential moving average, and we blew right through that golden pocket and tagged that 100% retrace area. This is super bullish, and pretty much the bear's last stand is this 100% retrace area, because if we get into blue sky territory, this one's going to want to run. So we'll go ahead and put another check mark into the bulls camp. And now I could pretend that TA drives fundamentals, but we all know it's the other way around. If you're finding all this helpful, then go ahead and subscribe. Or better yet, join the Discord, where I give traders what I'm thinking before open and after close, as well as the algorithm signals on over 70 equities with my feedback on whether I'm entering or staying on the sidelines, as algos can't account for everything. Also, as the Discord will be having a birthday next month, anyone that joins now for the low introductory price will keep it as long as they stay an active member, just like all the other current active members, as I'll be raising prices next month for any new members. And if we go ahead and turn our attention to the bottom of the chart, we see that this MACD line, along with its histogram, is all of a sudden showing momentum maybe reversing to the upside. And I think many people are starting to ask themselves, is this going to be a bull trap with a double top, or is it time to set some new all-time highs? If we flip over to the Qs, we didn't tag this 100% retrace area, but this guy's looking bullish as well. So another check mark for the bulls, as if tech starts to put its back into it, this one really could start ripping higher. So moving on. Now the IWM, the Russell, it looks a little bit more ominous here, as we pretty much put in a doji candle, which can be a sign or signal of a reversal. And unlike a double top that we saw on SPY and Qs, on this one, we're seeing this doji candle kind of set up camp here in the golden pocket. Now, if we flip on the Bollinger Bands, we see that they're still squeezing. So this next move can be a big one. And if we have what is perceived as a bullish print, I'm going to be on the TNA train moving higher. So this one, we're going to put a check mark into the bears camp, as you know, this could be a signal or sign of a reversal, and typically IWM leads the SPY. And this week I'm adding Bitcoin, and we can see this rising 20 simple moving average and how last week Bitcoin bounced off of that and had every chance to break out. But instead, mostly on Friday, this guy went ahead and was down 4%, which pretty much made it give a not so good look for the week. So we're going to go ahead and put the check marks on this one in the bear camp. As Bitcoin is the ultimate risk asset, and if it's all of a sudden signaling risk off, then the markets may follow. But remember, this one is opened on Saturday and Sunday, so pretty much anything can happen. And this week I'm also adding Tesla, because if Tesla can hold this 165 area, then this could be a pretty interesting go long area. Now, US 10Y yields this week, they dipped enough for me to make some money on TMF, but when we look back at the week, they really went ahead and held support. Now, since I do a lot of swing trading, I would love nothing more than to see those yields break support and go down for the next leg lower. So I think we're going to have to give the check mark to the bears on this one, as ultimately we did hold this support area, and if yields are pumping, then most likely bonds and equities are dumping. But what I think we're all hoping and praying for, unless you're short, is that this yield area will lose support on the PPI and CPI news and start to move lower. Well, the VIX, it went ahead and got crushed once again. And this is either signaling that all fear has left the market if we can get below some of these recent lows, or it may be signaling that it's time for another bounce. Now this one, I'm going to give the check mark to the bulls, because at this point, if volatility starts to break below 13 for an extended period of time, then equities are definitely moving higher. So returning to the economic calendar here with next week, let's face it, it's all about inflation, with PPI on Tuesday and then CPI on Wednesday, with a little bit of US retail sales sprinkled in there as well, as these inflation prints will definitely move the market one way or another. And just thinking about the week ahead, NVDA reports the following Wednesday, and that will have a huge impact as well. As that's all I have for now until the next video, and we'll see you then.